Joining us today is Raamdeo Agarwal, one of India's most respected market voices. He's the chairman and co-founder of Motilal Oswal Financial Services. Mr. Raamdeo Agarwal, before I talk to you about the markets and their reaction to the budget, I want to ask you, how will you like to describe Budget 2026?
So we are calling it AI infra boom, AI infra push. That's the highlight of the budget. Rest all are there, she has to speak for an hour, so she has spoken. But the real meat is in this data center tax break of 22 years. That's something which is very big, out of box, and very aggressive thinking on AI infra, global AI infra boom. This is going to be quite a game changer.
But why did the markets react negatively?
Yeah, it was because uh, market was expecting, because markets were weak, FIs were pulling out. So the expectation was that it will be pro capital market budget. There'll be something, capital gains tax or something will be relieved, or whatever. They were expecting that, at least they were not, market was not expecting any anti-capital market kind of a stance. And hence, when the STT was increased steeply by 50 to 100%, that kind of gave a little root shock to the traders. And today, fortunately, the FIs were not trading. Otherwise, the route could have been even deeper.
Are you expecting this bloodbath to spill over to Monday as well, next week?
Not really. I mean, Monday means tomorrow. So, not really, because, when both come together, then the impact would be much higher. But now, today, domestics have already, uh, uh, they've done already what they want to do. And tomorrow, there will be only FIs who will, at the margin, they will kind of exhaust their frustration.
What is your view on the hike in STT that was announced in the budget? Now, the government says the idea is to discourage speculative activity.
But you should time it. See, the markets are very sensitive. You should time it very well. Today, right now, we are seeing the global turmoil is like crazy, in the sense that you have the metals moving up and down 20-30% in a day. You have emerging markets collapsing. Indonesia collapsed the other day by 12, 13, 14%. So, it's a very, very sensitive moment. Yes, whatever you want to do in terms, you are the kind of regulators, and the government can do whatever they want to do if you want to cut the speculative, what you call, activity. But I think timing could have been better, in the sense that I don't disagree with the step, but you could do it in more opportune time rather than now. And when markets are stable, going up, activity is picking up, corporate earnings growth is done very well. At that point of time, you can silently put the, like GST 2, you can drop the, you can increase the STT by whatever margin you want to do. Not at this juncture. Right now, antagonizing the FIs, because they also have very large F&O book, particularly options and all, to hedge their portfolio. So if the cost of hedging goes up, so the high frequency traders will definitely get discouraged, and it will withdraw the liquidity from the system. Only good thing is that it is going to be applicable probably from 1st April. So we have 2 months of buffer when things might remain normal.
Was it only STT or there was something else as well that the markets didn't really like in budget?
No, I think everything seems to be all in place. I mean, it was as I said, this data center thing, all kinds of capex push is there. I think the capital budget of the government not moving significantly from 11.5 to say 12.25 or something like that, which is just about equal to inflation. So probably, I think that was the first announcement. First number came up, I think, in first 10 minutes of the speech, and that kind of made people believe that it could be status quo kind of situation. Not much of budgetary proposals will be there. And actually, government last year had cut the direct taxes for 12 lakhs, up to 12 lakhs. And then on top of it, they have done the GST 2, indirect taxes, they have cut it by 10%. So there was, at least in my mind, there was not much of a tax relief proposal expected in my mind. And then I think they particularly took the capital market. Why? I don't know. One is the STT, and then second was the buyback. So in that buyback proposal also, if you see, buyback is announced by whom? Not by the minority shareholder. Buyback is announced by the majority shareholder. And majority shareholder, if you are not given any relief to them, so why should the promoters do the buyback and pay 35% tax, which will benefit the minority shareholder to the extent of say capital gains tax. So I think the decision is not made by the minority shareholder, it is made by the majority shareholder. They will not do the buyback. So it's a vested proposal, I would say. If at all you want to do it, either the way status quo you could keep it, but if you want to make it more beneficial for the minority shareholders or for the shareholders per se, you want to make the buyback as a effective instrument, you have to do it for everybody, not do one for the promoters and one for the minority shareholders.
Mr. Agarwal, government says it was a budget for Viksit Bharat. Will the proposals that were announced by Finance Minister today bring foreign investors back who've been pulling their money out of the Indian markets for quite some time now?
Yeah, see, that's a bigger question, and that is not dependent on that is a function of earnings growth, current valuation, what's happening in other emerging market, how cheap are the other emerging markets. If I'm getting the same stuff at 40% cheaper, 50% cheaper in China or some other country, I would go and buy there. So I think the challenges are my earnings growth is low, my earnings growth is much lower rather, I would say, and my valuations are highest. That is the real source of problem, not the STT or anything budget speech or anything like that. It is to do with the valuation and current earnings situation, which has nothing to do with the budget.
Valuations are high, like you also said. Is there a bigger correction on the cards anytime soon?
No, I don't have any levels in mind, but correction is going on for last so many months, and even today it corrected by 2% almost. So now our P multiples are more like 21 types, from 22 it has come down to 20. So 4-5% it has corrected. So now, say at what price it will look attractive to the foreigners. There are two things. One, my current position gets corrected, and two, my earnings start accelerating. And I think this budget is very growth oriented, because the nominal GDP growth rate, as we reverse calculated, is about 11%, 394 lakh crores on the base of I think 354 lakh crores of the current years of new estimate of the nominal GDP. So that 11%, to do 11%, I think now if the inflation goes to say like 3%, so I think the inbuilt real GDP growth is about 8% in this. If the inflation goes to 3%, if inflation goes to say 3.5%, then we are talking about 7.5% kind of growth rate. Everything works out. So it's very growth oriented. It's very optimistic. Corporate earnings are picking up. You might be seeing all the auto numbers. That's booming for the month of January. So I think everything is fine. We have to just wait for some more time for the earnings to catch up and the valuations to become a little more reasonable.
And lastly, what's happening with gold and silver? What's behind the crash?
Yeah. I don't ask me that. I'm useless on that. So better ask some commodity experts. And it's a global speculation, not only in India. I think people have gone nuts about the gold and silver, and then other metals correlated with that. So people started finding correlation between gold and silver, then silver and copper, and then zinc and copper. So like that, one went on other, and massive deliveries were taken in ETFs. So this is a financialization of commodity markets. So you can buy gold by just pushing a button. So I think too much of money got channeled into these narrow commodities, and that led to this massive speculation. See, whenever the commodity prices go too much away from cost of production or marginal cost of production, I think those speculations are not sustainable. So gold today you can produce at at best, I mean, $1,500-$1,600, but max $2,000. Whatever gold you want to produce, you can produce. Now having price at 5,000, even today it is much higher than the replacement cost. So let's see what happens.